Hey guys, Cameron Williams here. Gonna try to keep this video as short as possible as I'm on my way home from work here, but this video is gonna be about the pending global economic crisis coming up. It's looming, it really is, because if it looks like a pending recession, smells like a pending recession, tastes like a pending recession, guess what? It's a pending global recession, and that's what's about to happen here in Q4 of 2019. Honestly thinking probably this next month, in October here, I'm 85% sure that's when it's really when it's all gonna go down and it's gonna really start to tumble. But 15% of me says it could happen in the remainder of Q4, so I'm talking either November, December, but October, that's where my sights are set on. October 2019, Q4. Good there, lady. You know, gotta love letting people cross the street there. But there, like I said, there's a few reasons that lead me to believe this is all gonna go down. I'm going to start first with the technical analysis. So the technical analysis and fundamental analysis, that's what really leads me to believe that this is all going to happen. But let's just go with the technical first. So just S&P 500, it's about to make its third tap of its all-time high. So its all-time high is 3,000 or 3,000, something like that. It's on its, if you look at the 1 year to 5 year time frame, it's about to make its third tap on that of the ceiling. Guess what happens? It taps, it falls down. The floor completely falls out from under it. So that's what's about to happen right now on the technical side of things. Any chartist, I'm not much of a chart reader, but I do have decent amount of skills at looking at the charts. But this is a no-brainer. Any chartist from the most novice to the most expert chart reader will agree that this is going to happen. Then that's just looking at the charts that the floor is going to fall out from under it. But let's look at the fundamental analysis. So that's just different actual qualitative data. So just data in the news, data in industry, data across the world with the economy and so on and so forth. And that's what truly leads me to believe this is all going to go down with the global economic crisis pending. First thing we're going to look at is in the United States, there's in the past few weeks, I'm not sure what it is actually today, I haven't checked, but there's been on the bond yield, a 2-10 inversion. So what that means is the 2-year bond and the 10-year bond, the yields of that, the 10-year is supposed to yield more than the 2-year, obviously, because you hold it longer. It's kind of more or less risk since you just have it parked there, but you do get more of a reward since you got to wait for it a little bit longer. But the 2-year is supposed to be below that because you put it in, you want it out quicker. It's not going to have as high of a return. But just recently, this has been reversed. So the 2 years actually making more than the 10-year, and that just doesn't make sense. That's not correct economics by any stretch of the imagination. Then another thing we want to look at too is the federal the federal interest rate has been cut. Fed's cut the rate twice in the past 7 weeks. So that means they dropped the interest rate, so they want to kind of spur the economy more and more and more. So more people spend and it grows and it grows. But the thing is, that's all well and good, but our economy is already good. It doesn't need more penetration, more surplus of money. So what the Federal Reserve's pretty much doing right now is just printing more money, kind of just for no apparent reason. And whenever you're in debt, you just can't print your way out of debt. Shit's gonna hit the fan, if you will, for lack of better terms there. And we also want to look at is there's a $165 billion, not million, $billion getting put back into this economy right now. So that's going to pay its dividends. It's going to have its effects here, and not in a good way by any stretch of the imagination. So yeah, the stocks right now, I know they're doing very, very well, but it's kind of an artificial boost up. It's a lot of borrowed money getting put into the economy, which is not a good sustainable economy. It's just being propped up on borrowed money essentially there. So that's another reason. And then also can get into some miscellaneous factors. So for example, the retail closures across the country have drastically increased. The manufacturing sector has already been put into a recession. It's been said it's put into a recession already by world banks, by central banks, by things like that. Not good. And also, if you look at the U6 unemployment rate, it's 7%. It's 7.2% right now, and anything above 6%, it's a telltale sign of a recession. And that's exactly where we're at right now. We're just at it's not a matter of if, but a matter of when right now. I started thinking that about a couple months ago, but I feel it's my service to kind of protect the community. Obviously, we can't prevent this, but we can do all the preventative measures, protect ourselves, put our monies in different places, and that's what I'll get into shortly here. But I want to finish talking about the rest of the global crisis that is pending right now. The housing market, it's been going up for the past 12 years. Hey, guess what? Last time, 12 years ago, was the last economic crisis, the last housing crash. It's more houses are being built, more houses are being sold, more houses are being at a higher price. But then once again, this is an artificial boost of the economy here. There's lower mortgage rates, people getting mortgages that probably shouldn't be getting mortgages, people spending beyond their means. And that's really the whole name of the game. I'll get into it later, how the dollar and the economy is pretty much an orchestrated bubble, but this is just another part of the cycle happening right now. But it's more than just in the United States as well. It is across the world where we're seeing detrimental effects and the kind of the telltale signs of an economic crisis. Look at China. They've been growing rapidly in the past years, but their debt is growing more and their growth in their economy is actually slowing down. So that's not a good sign. But that thing is, China is such a huge manufacturer across the world. So guess what? That's going to affect places like Australia, where they get their exports, and among other places as well. So just even though it's in China, it affects the US, it affects Australia, it affects other places as well. And that's just, it's not a good sign for the economy. You go into Germany. The World Bank said Germany is in a recession right now. They're at the very brink of a recession. They said that back in August. And they said there's no sign of it turning around in fall, in this upcoming fall. And that's what we're about to get into. Actually, tomorrow's first day of fall. How about that? But there's no signs for the turnaround there. It's already, it's too far gone at this point, on just in America, in China, in Germany, across the world. We're too far gone. We've borrowed beyond our means. We're too far in debt. It's going to come back and bite us in the ass. It really is. It really is. And guess what? The stocks, let's go back to the stock market. S&P 500, the Dow, whatever you want to call it, it's built on confidence. People are confident in the market right now because it keeps going up, going up, going up. But guess what? What goes up got to come down. And even though it gets built up slowly, whenever fear, that's right, fear is what drops the market down and lowers the market prices, that's when the floor gets just completely wiped out from under us here. So, I mean, it goes up slowly, goes up, but when it falls, it completely falls off a cliff. And that's what we're about to see here sooner than later. But what my whole purpose of really making this video is to help kind of just protect my community and give examples of and suggestions of preventative measures we can take to. It's gonna be detrimental, but what we can do as the people, we can only do what we can do, and the things that we can do is get out of this market. Put your money in gold. Put your money in silver. This is by no means financial advice, but you need the money right now needs to go into hard assets. So go into gold, go into silver, cryptocurrency. That's what I'm going to get into here. This is a little bit more of a theory side of things, but it's seeming to add up more and more that, guess what? The central banks, the World Bank, they have power because they control the money. And markets are built on cycles. So this cycle goes up, goes up, goes up. The bubble pops. Cycle goes up, goes up, goes up, bubble pops. What happened in 2008? It's what happened prior. It's what's going to happen in this next, probably month, but next 3 months here is when it's really going to, when I'm going to say the word again for lack of better words, when shit's going to hit the fan. But the central bank, the World Bank, they already have this figured out. They are the bankers of monopoly. Whenever you're creating the game, you're going to make sure you win the game. Let's put it that way. They're going to tilt the cards in their direction, which with all due respect, it's not morally right, but if you're creating the game, you're going to make sure you're going to win the game. And their plan is more than likely going to change from all this paper currency. They're going to swap it into digital currency where no one really, it's not adopted yet, it's not mainstream, it's not anything like that. The paper currency isn't going to be as useful as that digital currency, and once they start ground level with the digital currency, which they already have, you've seen Harvard invest in it, you've seen JP Morgan, you've seen a lot of big guys behind the scenes. They're investing in the crypto space because they see the inevitable future of money, of economics, of anything like that. And they just want to get ahead of the game, because once it becomes mainstream, it's all going to be too late, and then the cycle's just going to continue again, and the bubble's going to get built back up in the crypto space. I'm not talking Bitcoin, I'm not talking other currencies, I'm talking just the whole use case of XRP, of Litecoin, of a whole slew of other currencies. There's like 1,400 right now. Yeah, a lot of them are going to be shitty. They're going to completely disappear within this next year, within the couple years. But the real ones with use case, a real scenario, they're going to be around for quite some time in the future. And that's where we want to put our money in. Again, this is not financial advice by any stretch, but that's where we need to put our money into the gold, the silver, XRP, different other cryptocurrencies, because that's the future of money. And like I said, if you can control the money, you can control the people, and that's what the central bank, World Bank, and that's what the banks do, and that's what they've been doing behind the scenes. But it's just all going to come to fruition now once again as the cycle continues. But all we can do is just prevent ourselves and protect ourselves as much as we can in this situation. And that's what the whole point of this video is to just protect yourself. Open your eyes, protect yourselves. Tell your friends about this stuff, share with your family members. I just don't want people to get caught in the dust and just get caught in just a detrimental state of mind, and a state of poverty, and just have everything taken away from them because they got beat by the game. You aren't going to beat the game, but all you can do is just adapt with it and play it as well as you can and as much as you can. And that's my suggestion to all of you guys here. I'm gonna leave you guys on one more little quote here. I actually had to write this one down. But money is power, as we know, but knowledge of how money works is a much similar power, and maybe even more power, because like I said, you can't beat the game. All you can do is adapt to it and just play the game by the rules, and then see where the cards fall. But please be aware, be protected, and be ready, because the global economic crisis is around the bend. Signing off, guys. Thanks a lot.